Hey everyone, this is Jack. Welcome to your daily update. Alright, so let's take a look at the markets and try to figure out what just happened for the past 14 days. Why 14 days? Well, it's been about 14 days since we gapped up and there was a squeeze on the index that fired. Okay, we made a second deviation move. I'm going to go ahead and zoom in just a little bit more and then tell you what this moving average right here is. That light blue line is the daily 100, and the more important line that you need to be focusing on is 4227.75. And what is that? Well, it's a 50% retracement all the way back, going to the beginning of the year. I mean, really, it's like January 3rd to a T. Okay, so we have a little bit of a momentous move with a squeeze firing to take us into the most recent high that was really about May, let's just call it May, 41.65. So we've made a pretty large move. We've made 100% of the move from the low to the high, the most recent high, going back to let's just call it 6.2. Right at the end there. Okay. Well, what does all this mean? Okay, so the argument can be made that this is extended and that we probably need to let this maybe take a break and come back down to earth a little bit, which would mean about trading to about 4,000. I'm not against that idea, and that's what this video is about. So if I show you another chart here, on SPX with some voodoo lines, which is a great indicator that we sell here, that allows you to kind of see where the next move might land. And we know that the move that we've had already made us land here at about 4,100 at the beginning of the week after gap up last week, Wednesday, Thursday, Friday. And this is now kind of turning into a bull flag or a little bit more of a consolidation phase. And we know that this phase can last at least up to 10 days. Well, what do we know about the first week of August? It's typically weak, sideways. What could we have next week? A continuation of that. So what this video is really about is letting the market take a break, and let's get ready to buy this thing again, because what I'm looking forward to is a rally into the end of August. And it's like, hey man, Jack, it's August 5th and you're talking about a rally into the end of the month? Well, let's just something to get ready for. And it's not, it was never a bad thing to have a goal, right? This is part of my perspective, and the goal of this perspective is let this market take a break, let it surprise us, revert to the mean. A reversion to the mean would actually be 145 points lower on SPX at 4,000. How do I know that? It's because the reversion to the mean is right here. Okay. On top of the squeezes firing and all that kind of stuff, what else can we look forward to? So I'm looking at targeting 4,000 by next Friday, and then that kind of is the cutoff for me. I'd like to be trying to buy this thing. You've got some kind of interesting earnings coming up at the end of August anyway. You've got Nvidia, which is something we'll talk about in the rooms. But as far as futures go, what should we pay attention to? Well, things like a gap up on Monday, getting ready to short that if we get it, or just being able to anticipate a short. If you're trading futures on the Monday morning extended session, then that's kind of something you want to be looking out for. What did we do this week? We spent a lot of time trying to look for bull traps, right? So what we're trying to do now is identify the high and just kind of go, it's pretty fundamental, looking for a reversion to the mean, letting this take a break, and then also letting that 10-day cycle kind of play out. And right now we're on about day 6. So what I'm looking for is more weakness for the majority of the week next week, and then we'll talk about buying it. On moving averages and all that kind of fun stuff on the left-hand side, we talked about the light blue line here kind of crashing in. That's just the 100 SMA, and my upside target at the end of this month is somewhere around 42.52. It's a 618, but that's kind of out of scope for the discussion right now. As far as moving averages, typically if we go to a 100 period 100 days and we rallied all the way up to it, typically you're always at a second deviation. And it's wise to consider a consolidation phase, even if it is not all the way down to 4,000. It could very well just be down to about 4,050, because the low bottom wicks from this week are 4,080. But if we were to complete the cycle to the downside, considering this move, the gap up here, the gap up here, then the end of this cycle is way lower than 4,000. The end of this cycle going across is about 4,020. So that's kind of the idea, that we're just trying to draw lines in the sand and see what makes sense for next week. All right. Pretty straightforward. I really only wanted to cover the S&Ps because that's what we'll be focusing on a lot. Here's one more thing for you. If you like trading, or if you're kind of catching on to the commodities sector, check out corn. It's got a daily squeeze at the lows on a fire line. Today, you had your first major buy signal, and you have light blue on the histogram for the first time. Pretty cool, right? So what you could be doing is saying, well, I'd like a long position on corn going into the end of the year, or you can play this in the options world. I've been talking about cow feed, moo and COW ETFs for agro, but corn here, corn futures, looking pretty solid, kind of bouncing off of a quant pivot level of 600 and holding that pretty well. So the argument can be made that it has made a low and it has bottomed out. And I wonder if this kind of has a little bit of a pop back up to about 700. If we're talking about completing cycles, it gapped down. And, June, July was all about corn selling off, right? But now it's kind of over with. It's all finished. So I have been paying attention to the commodity space for the past, I would say a year. There's a lot of really good information about, futures of corn and food in general going up into the fall. I think this is a chart to look at. I think there's a good trade here, more on a 60 to 90 day outlook, or even out to January. But you are what it looks like to be buying the low in a squeeze, which is not really a bad thing. You don't want to ignore something like that. So wanted to talk about the S&Ps with you and the indexes, give you a little bit of an insight of how I'm looking at corn. And then just more stuff like this in the rooms. Feel free to join us in the afternoons in the future session. And we look forward to seeing you there. If you have any questions, be sure to ask during the session, and we'll see you in the next update. Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.